The one thing that kind of bothers me is that this is really a more of a sign of economic activity. So again, if you strip out Amazon from the discretionary sector and Tesla, which are basically the two stocks that drive that discretionary sector, there's not a lot of activity going on there. So again, when we take a look at the overall economy, just be a little bit more cautious. But speaking of markets, let's talk about what you need to know before the bell this morning. Yesterday, the markets put in a fourth positive day of returns. Very nice, getting back above that 20-day moving average. Now starting to challenge back towards all-time highs. The Dow actually yesterday did set an all-time high, crossing 48,000 for the first time in history. So again, just, the calls for Dow 50,000 back in 1995, going to finally get there. So there we go. So anyway, but look, the bull trend remains firmly intact here. We're about to trigger a momentum buy signal here as well. RSI continues to improve here. So again, getting a little bit of buying into the markets. Brent also improving in the markets. We're seeing advanced decline lines, particularly in the tech sector, starting to pick up here a bit. But as I've talked about lately, we've really seen a bit of a rotation in the overall markets. And again, if you take a look at different sectors, like for instance, healthcare has been doing exceptionally well. So while tech has kind of been lagging as of late, and again, if you look at the technology sector as a whole, it's kind of been hanging in there right now. It has, it's had a bit of a correction, been rallying back here the last few days. Still on a sell signal here. Relative strength, overbought condition, relative strength is getting worked off. So we're going to be in a position here soon where tech is probably going to start catching some flows in the markets, but while that weakness has been occurring in tech, particularly in those big mega cap stocks, etc., as I was just showing you, healthcare has been doing just fantastic. A lot of companies in here setting new all-time highs. So again, just been a bit of a rotation within the markets coming out of technology, which we talked about for weeks, was extremely overbought, needed to have a bit of a respite, and that's what's been occurring in a lot of these big tech stocks. At the same time, that money has to go somewhere, and it found its way back into healthcare, which was extremely oversold. Now, one area that's still under a lot of pressure continues to be staples, but as we've talked about previously, starting to see a little bit of rotation back in staples. Not a lot yet. We're not seeing that push into like we're seeing in healthcare right now, but staples are triggering a buy signal from a fairly low level, and relative strength is still very oversold and starting to improve. So we're starting to see some positive signs here. A lot of negative overhead pressure on staples right now, particularly all these moving averages that are sitting on top of staples. But if staples can start to cling on to the 20-day moving average, get above that, potentially get above the 50, you're going to start to see some momentum starting to come back into that sector. We should start to see some rotation back into that sector when that occurs. Outside of that, discretionary, of course, this morning, Disney reporting earnings are also increasing their buybacks. They did beat estimates, so we'll see how the stock does today. But the problem with Disney is they just make crappy movies. So, they brought Bob Iger back, right, to fix things because they destroyed their two main franchises, Marvel and Star Wars, right? Completely killed that. And on this whole idea of whatever you were doing with your movie structures, but I got some ideas. But they bring Bob Iger back to fix it, and he does nothing to fix the problem. They continue to make crappy movies. Nobody wants to see that stuff anymore. And of course, the stock's down another 3% this morning after a report. So, just go back to do what you do well, right? Entertain people and leave all the politics at the door. You'll be a lot better off. Yeah, exactly. So quit messing with Snow White. Leave that alone. Anyway, But take a looking at discretionary. Discretionary, of course, this is primarily Amazon now, but that's been holding up fairly well here. But again, we'll see what happens within this sector. But again, when we start looking at the consumer as a function, and again, this is the one thing about staples, just a real quick trip back over to staples here. The one thing that kind of bothers me is that this is really a more of a sign of economic activity. So again, if you strip out Amazon from the discretionary sector and Tesla, which are basically the two stocks that drive that discretionary sector, there's not a lot of activity going on over there. So again, when you take a look at the overall economy, just be a little bit more cautious about that. And lastly, of course, finance, which is one of your other big components in the overall markets. Finance has been doing well, coming back up here, triggering a buy signal here from a decently oversold level. Relative strength improving. So again, we're seeing a little bit of rotation, again, out of tech into some of the areas that were more beaten up, which was finance, staples, and healthcare. Starting to see that occur here. So again, that's starting to increase the breadth of the overall markets and starting to provide a push here that should help the market support into year end. Anyway, that's what you need to know before the bell this morning.